All right, welcome to the Hudson Board of Trade. It is earnings lines for the week of December 6th. So here at the Hudson Board of Trade, we are a market making school. It is the fastest way to learn how to trade anything, is to learn how the market makers are doing it. It's pretty easy. Here at the Hudson Board of Trade, we've traded 249,000 shares. These are educational shares. And if you're interested in what we're doing, please thumbs up our videos and think of becoming a member of the Hudson Board of Trade. But let's get back to this. So on Tuesday, we have Z-Scale. It's $49.50. The straddle is worth $7 for the week, and it's a 14% straddle. So the break even is 42.5 on the downside and 56.5 on the upside. If you think Z-Scale is going to stay inside this range, you would want to sell the straddle. Then we have Lands End. It is before market open. It's currently around $12.50, and that straddle is worth $2. So that's representing about 16% of the stock price. So the break even is 10.5 on the downside and 14.5 on the upside. The reason why it's asterisked is it's a 2-week straddle, not a 1-week straddle. So if you think Lands End is going to stay inside this range, you would want to sell the straddle. If you think Lands End could move outside of this range, you would make money if you bought the straddle. Then we have Salesforce CRM aftermarket close on Tuesday. It's currently a $160 stock. The straddle is worth $7. That's about 4% of the stock price. So the break even is 153 on the downside and 167 on the upside. If you think Salesforce is going to stay inside this range, sell the straddle and you would make money. If you think it can move outside of this range, you would want to buy the straddle. We also have Workday aftermarket close on Tuesday. It's currently a $172 stock. That straddle is worth $11, which represents about 6% of the stock price. And the break even is 161 on the downside, 11 minus 172 is 161, and 11 plus 172 is 183. So if you think Salesforce is going to be between 161 and 183 on Friday's close, you would want to sell that straddle. If you think it can move outside of this range, you would make money if you bought the straddle. On Wednesday, we have Campbell Soup before market open. It's currently a $46.50 stock, and the 1-week straddle is worth $3. So that's about 6% of the stock's price. And on the downside, I take away $3 from 46.5 and I get 43.5. I add $3 to 46.5 and I get 49.5. So if you think Campbell Soup is going to stay inside this range, 43.5, 49.5, you want to sell the straddle. If you think it can move outside of this range, you would want to buy the straddle. We have Slack, which is work. Aftermarket close on Wednesday. It's a $21 stock with a $3 straddle. So that's about 14% of the stock price. $3 less 21 is $18 on the downside, and $3 plus 21 is $24 on the upside. So if you think Slack is going to be between $18 and $24 for this week, you could sell that straddle. If you think Slack could have a big move outside of this range, you would want to buy the straddle. We also have H&R Block. It's a 2-week straddle too, because it's got the asterisk. It's currently trading around $24, and the straddle's worth $2. That's about 8% of the stock's price. So $2 less 24 is $22 on the downside. $2 plus 24 is $26 on the upside. On Thursday, we have Dollar General before market open. It's currently a $157.50 stock, and that straddle is worth $10. That's about 6% of the stock's value. Okay, so I take $10 less 57.5 and I get 47.5. I take 157.5 plus $10, I get 167.5. If you think Dollar General is going to be between 147.5 and 167.5, you would make money if you sold the straddle. If you think it can move outside of this range, you would want to buy the straddle. OKTA is aftermarket close. It's currently a $122 stock, an $11 straddle. That's about 9% of the stock's price. The break-evens are 111 on the downside and 133 on the upside. Tiffany, I put this on there because it's a takeover target. So it's a $134 stock, and it's got a $1 straddle. That's less than 1% of the stock's price, right? So 133 and 134. So if you think this deal could break up or something could happen, but it's pretty much pricing it in that the deal is going to go through, I would assume. Just thought it was interesting and put it up there. And then on Friday, I believe we have unemployment. So when we have unemployment, we look to the bonds. The ETF is TLT, it's $138. The 1 week straddle is $1.50. That's about 1% of the stock's price. The break even is 136.5 on the downside and 139.5 on the upside. If you think this TLT is going to stay inside this range, you would want to sell that. If you think it can move outside of this range, you would want to buy it. What I'm doing here is I'm teaching people the basics of market making, right? And it's going to bring on more questions about delta hedging, gamma, vega, theta. And this is stuff that will all come through the course of practicing with these trades. So if you like what we're doing, please thumbs up the videos and subscribe to the YouTube channel. Think of being a member of the Hudson Board of Trade. But I have made a product that's smaller, safer, and simpler for you beginners to start using. And I'm just trying to create an options trading school where I can pass along this information. So please think of being a member today. Thanks.